Looks like there's some follow-on buying this morning as well. There you have it, 55 points in the green for the Nifty.
Friday was a solid session for our market, but today things are fairly quiet at the index level.
We need to see more volume participation, but as of now, a lot of price participation. Larger stocks are seeing a lot of interest today.
It's an absolutely flat session. But sectors are doing well. Some sectors are under pressure. The sectors which are doing well are autos, PSU banks, real estate. The sectors which are under pressure are FMCG, IT, metals. We are going to end near the high point of the day after middling through most of the session.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track 6 hours of the day's trading action in 5 headlines. I'm Sonia Shenoy and here are all the headlines for the day. A last hour recovery helped the sensex and the Nifty end in the green. Financial stocks led the rally. Mid-caps outperformed blue chips today. Crude oil spikes after a surprise decision by the OPEC Plus to cut output by 1.16 million barrels per day from May. Analysts say this move could push prices to $100 a barrel mark by year-end. The news helps oil producers ONGC and Oil India clock gains, while stocks of oil users witness some pressure. And Motown sales for March are a mixed bag. Sales of passenger vehicles marginally declined quarter-on-quarter for Maruti Suzuki. But SUV sales shine. The auto major sounds a note of caution, says there are red flags for the auto sector which could hit demand. However, commercial vehicles show strong positive demand momentum, while two-wheeler domestic sales see double-digit growth in March. And the deferral of the APM price revision pushes IGL and MGL lower. Gas Committee Chair Kirit Parekh says that he's hopeful of the cabinet clearing most of the panel's recommendations soon. Tells CNBC-TV18 that the time frame for this remains unknown. And in stocks and news, a strong quarterly business update pushes CSB Bank higher, while a weak one hurts Karnataka Bank. Meanwhile, Time Technoplast rallies after an important regulatory nod. Well, here's the lineup of what we have in store for you in the next half an hour. In Market Opinion, we have Ed Yardeni, the president of Yardeni Research. In Corporate Voices, we have Shashank Srivastava of Maruti Suzuki and Hemant Sikka of M&M on the auto industry. Okay, it's a power-packed lineup in the next half an hour, but before all of that, let's get to the day's trading action. A last-hour recovery helped Dalal Street end at the day's highs. The Nifty and the Sensex ended 0.25% in the green. It was financials that led from the front, with the Nifty Bank gaining 0.5%. The mid-caps also outperformed the benchmark indices. BSE companies gained a market capitalization of over 1.5 lakh crore rupees. In fact, a great going because it was the second day running that the bulls were in complete control of the market. Prashant is here with the day's trading action. Prashant, over to you.
Well, decent gains for the market by close. The market started on a positive note, gave up all gains, went into the negative, stayed flat for the bulk of the session, and towards the end, in the last 30 minutes of trade, it picked up again, and we came almost close to where we started. The opening level, that is, the index was shot off that level by about 20-30 points. Banks have been the stronger part of the market, and today was no different once again. Bank Nifty ending about 0.5% higher. Now, mid-caps and small-caps on Thursday and Friday last week have been doing did very well. Mid-caps were flat, but small-caps continued the momentum on the upside, and that's the reason why the broader market advanced decline ratio, etc., was also pretty favorable. Let me come to sectors. Autos did quite well. I'll come to stocks there in a bit. CPSE, the government companies, packed it quite okay. And as I said, both public and private sector banks really stood out. Now, Nifty gains coming through in stocks like Hero, Coal India, Bajaj Auto, Maruti and Divi's Laboratories. Oil popped up, right? I mean, Sunday evening after that OPEC announcement this morning, we woke up to oil prices up 5%. The oil marketing companies on your screen down as a result. The broader market looking quite okay. RVNL, JBM Auto, Atul Auto, TTK Healthcare, Dhani, Gati. These were some of the volume-led gainers. There were losers as well. KPIT Tech on the back of a brokerage downgrade. SRF was lower. The Adani pack, more down than up today. Adani Green case in point. MGL, Policy Bazaar were a few names. The Nifty, after today's move and the move that we've seen last Thursday and Friday, stands exactly at the 40-day exponential moving average for the Nifty, which is the first level it needs to take out. Tomorrow is a holiday, but remember, global markets are trading, and one can only hope that after the stability that we saw last week, it continues all the way this week as well when we return to trade on Wednesday morning. Back to you.
All right, thanks a lot, Prashant, for that. Well, in Market Opinion, Ed Yardeni of Yardeni Research says another Fed Reserve rate hike could hurt banks further. Meanwhile, Nilesh Shah of Kotak Mahindra Asset Management says the upcoming macro events could cause volatility in the market. Listen in.
once again, the Federal Reserve is turning out to be the key player here that affects everybody else playing the game. The Fed is likely to perhaps go up by another quarter point. I think they should be done, actually, because I think we are continuing to see inflation moderate. And meanwhile, the inverted yield curve has been predicting since last summer that if the Fed continues to tighten, something might break in the financial system. And sure enough, we have a banking crisis. I don't think it's anywhere near the banking crisis we had in 2008. The provision of liquidity to the banking system has been quite substantial just in the past 2 weeks. And that means that their total assets have actually increased.
Next year also, we will see a lot of volatility based on events. If those events turn out to be in favor of India, then certainly markets can deliver positive return, because since almost August 21, markets haven't given any return. But if those events go against India, then markets may deliver negative return. We remain positive on the auto space, mainly first the passenger vehicle, then the commercial vehicle, and then the two-wheeler. In passenger vehicle, clearly there is a K-shaped recovery. There is more buying at the mid to higher end than at the lower end. There is a waiting period. Commodity prices have cooled off, and that has not been passed on to the consumer. So margins will be positively impacted.
All right, on to the second headline now. Crude oil prices spiked after a surprise decision by the OPEC Plus to cut the output by 1.16 million barrels per day from May. Analysts have said that this move could push prices to $100 a barrel mark by the end of the year. The news helped oil producers clock gains while stocks of oil users witnessed some pressure. Manisha Gupta is here with the details. Manisha, over to you.
Well, thank you for that. Yes, that's right. The oil prices did surge after the OPEC and allies announced surprise production cuts. Let's take a look at how the prices have fared in the month of March. Oil prices actually fell 5% in March, hit a 15-month lows of $70 a barrel, and the fall in crude prices could have been the reason that prompted the OPEC and allies to cut production. Well, the group trimmed production by 1.16 million barrels a day. The Saudi Arabia is calling this a move to precautionary measure in a bid to support oil market stability. The cuts, which will start in the month of May this year, will continue till the end of 2023. Russia and Saudi Arabia will cut production by nearly 500,000 barrels per day, while UAE, Kuwait and Iraq will cut production by anywhere between 200,000 to 100,000 or even lower for some of those countries. The OPEC's volume cuts now, with all of this, stands at 3.6 million barrels per day, which accounts for 3.7% of the global demand. The OPEC has cited an export halt from Turkey, the rebound in Chinese demand, the slowing U.S. inflation and the high U.S. crude production in the month of March as a reason for the volatility in crude oil prices. So the big question is on where are the crude oil prices headed by the end of this year. We have Goldman Sachs report come in over the weekend which says that the prices are headed to $100 a barrel. A similar report from JP Morgan also says that $96 a barrel is where they are expecting the crude oil prices to end this year at. CMC Markets and Energy Aspects see the crude oil prices going to $100 a barrel as well. And then you have ING quoting prices at 90, Vanda Insights at 80, 85 and Refinitiv talking about $80 a barrel as well is where the crude prices could be before we end this year.
I'm not substantially revising my expectations for this year. As I've been saying, last year, Brent averaged around $100 a barrel. For this year in 2023, I'm expecting it to be $15 to $20 lower year on year on average.
We're looking at this point in time in the short term up to between $85 and $87, but perhaps longer term, we could see the oil prices actually weaken. And we wouldn't be too surprised if we saw it between $70 and $80.
All right, that was the big headline, actually, the move on crude. But the third headline today is what happened with the auto sales for March. They were a mixed bag. Sales of passenger vehicles marginally declined quarter on quarter, but Maruti Suzuki saw its SUV sales rise. Meanwhile, commercial vehicles showed a strong positive demand momentum as well. So let's quickly take you through some of the big auto trends that we noticed in this month of March. To start off, we had commercial vehicle sales, which were pretty strong this time around. So whether it was Ashok Leyland or even Eicher Motors commercial vehicles, good double-digit growth is what we saw this time around. There was a growth of 19% that Ashok Leyland clocked in, while a growth of 35% that Eicher Motors saw. The underperformer was Tata Motors. So you had Tata Motors CV sales, which were absolutely flat. But the management is quite optimistic. The management, Girish Wagh, who's the executive director of Tata Motors, said that the demand for heavy trucks is quite robust, and there's increased activity in e-commerce, construction and mining. There's higher replacement demand as well, advanced buying in anticipation of price hikes that have led to a strong growth in commercial vehicles. Apart from that, the second trend that I noticed was that two-wheeler sales have seen a good improvement as far as domestic sales are concerned. So Hero Motors saw sales growth of 15%, TVS Motors saw good growth of 22%. Channel checks indicate that Honda in the month of March faced a supply constraint, and hence Honda's loss was TVS Motor and Hero's gain. So hence you saw that up move over there. By the way, TVS electric scooter iQube also saw very good run rates. So 15,000 units sold in the month of March, second consecutive month of strong growth. And Royal Enfield also registered its highest ever sales in the year FY23. The other big trend I noticed was that SUV sales were very strong this time around. M&M reported record high SUV sales in the month of March with a growth of 31%. And Maruti says that their SUV market share is picking up. It's currently at 11% and they hope that it would reach 25%. They've guided for it to reach 25% by the end of FY24. And finally, talking about Maruti, the one thing that stood out for me in the interaction we had is that there are red flags in the auto industry. So that's what Maruti said. They are quite cautious. They said that these red flags could dampen the market sentiment further. So let's listen in to what the management told us earlier.
I think the growth of 20% plus in next year may not be likely. It's unlikely that we are going to see this type of growth. There are some looming red flags which we are now increasingly monitoring because we believe they could have a negative impact on the overall demand next year. That includes first and foremost the overall economy growth itself. The auto industry growth is very, very highly correlated with the per capita GDP growth. Our exports for Latin America, Middle East and Africa have been steady and strong. And immediately next year, we do see an improvement in our market share thanks to the SUV vehicles that we have introduced and the sales of which both the Fronx and the Jimny will start in April end. The combined effect of that should increase our SUV market share. Last year, our SUV market share was just about 11.5%. But in the Q4 of this year, when we have seen the good availability of Brezza and the Vitara, it's already about 18%. And going forward next year, I think we can go up to 25%.
We have been able to clock almost 33,600 units, which is a growth of 20%. The industry has been only clocking a growth of only 12%. So overall, I think it has been very, very good for us. FY23, as you know, has been very, very strong for the industry. When I spoke to you a few months back, we were talking about a growth of about 5 to 6%. Then we upped the guidance to about 7 to 8%. Finally, the industry has been very strong, clocking all-time high growth of 9,45,000 units, which is a growth of 12%. Very happy to share with you that the Mahindra growth has been 16% over this. So we have got some valuable share point gain. Our market share is upwards of 41%, and we have gained 1.2% market share in the whole of FY23.
Okay, let's slip into a quick break, but don't go anywhere. We'll be back in a jiffy with some of the other top headlines of the day. Stay tuned. Welcome back. You're still with us on Markets Today. Let's go straight to the rest of the headlines that we're tracking for you now. The fourth headline today, IGL and MGL slipped after the government deferred the APM price revision. In fact, there was quite a bit of a slide that we saw. MGL was down almost 6.5% by the end of trade. Surabhi is here to get you up to speed of what brokerages have made of the stock. Surabhi.
Thanks for that. So IGL and MGL is in focus today. That is because the government has kept the domestic APM gas price unchanged at $8.57 per MMBTU till further order. Now, the expectation was that the Kirit Parikh committee recommendations would be accepted by April 1st, which would have led to a cut in a domestic APM prices to $6.50 per MMBTU. Kirit Parikh told CNBC-TV18 that he expects the recommendations to be accepted soon. Citi says while the continued delay could create a near-term overhang for the CGD stocks, the pause in prices on a provisional basis suggests that the cabinet approval of the recommendation could be just a matter of time. Any modifications to these recommendations need to be monitored. They continue to view the stance on government towards CGD sector as favourable, MGL and IGL. The top gas pick is GAIL, as that could also be a key beneficiary of a lower APM gas prices. Jeffrey say while the delay was unexpected, they expect the new price notification to be announced in the near future.
All right, speaking to CNBC-TV18, Gas Committee Chair Kirit Parekh said that he's hopeful of the cabinet clearing most of the panel's recommendations soon. He also added that the time frame for this remains unknown. Listen in.
I've heard from people that yes, the cabinet is considering it. It's likely to be approved, but when it will be is anybody's guess. We have said that by 1st January 2027, everything should be market determined. I'm quite hopeful that it will be accepted.
Okay, and here's to the fifth headline. A whole host of banks posted their quarterly business updates today. A strong update pushed CSB Bank higher, while a weaker one hurt Karnataka Bank. Abhishek Kothari is here with a wrap on both bank stocks' performance. Abhishek.
Well, to begin with, Karnataka Bank, negative surprise coming in from their loan book has shrunk quarter on quarter. So deposit momentum has remained healthy, but it's lower than what the industry level is, growing at 8.7% YOY and about 3.3% quarter on quarter. The loan growth not that surprised negatively, growing by just 6.2% YOY and a decline of 3.7% quarter on quarter. So the CASA or low-cost deposit mobilization has remained largely in line with what their deposit momentum has been. 8.7% growth YOY and about 6.7% quarter on quarter. So CASA ratio flat on a YOY basis, but it has improved on a sequential basis. CSB Bank, strong business momentum continued for second quarter in a row. The deposits are up 21.5% YOY and about 8% sequentially. The CASA is up 16% YOY, but about 10.7% sequentially. So the CASA ratio has improved on a sequential basis. Advances growth remained robust despite a strong Q3 that they had, up about 30.3% YOY and about 11.75% quarter on quarter. The gold loan portfolio continued to show strong performance, growing at almost 48% YOY and about 10.5% sequentially, while X of gold loan, the loan growth was at close to 13% quarter on quarter. So strong business momentum for CSB Bank. Back to you.
Okay, the other big mover on the downside today was KPIT Tech. It slipped 12% after JP Morgan initiated an underweight rating on the stock. Nimesh is standing by with all the details. Nimesh, what went wrong?
JP Morgan is seeing two big catalysts, or derating catalysts for KPIT, and that's why they've initiated coverage in the stock with an underweight rating and a target price of 520. JP Morgan is the lowest on the street in terms of target price on KPIT. Now, the two key catalysts are the derating catalysts, so to speak. One, they believe that the growth is likely to slow down beyond FY24 to less than 20%. And the scarcity premium with the IPO of Tata Technologies is not going to go away. So that's the first key reason. The second reason is they see challenges in terms of growth, and KPIT needs to win orders every year to maintain a growth above 20%, and that's going to be a key challenge because auto is a cyclical industry, and it's very difficult to give that kind of benefit of doubt to KPIT, given that it's trading at a 50 times valuation in terms of FY24 earnings. So that's the other key reason why they see a derating catalyst for KPIT Technologies. Now, as I said, it's an anti-consensus view coming in from JP Morgan, and hence the stock is reacted 5% in today's trade. I was looking at the brokerage recommendations. There are 10 brokers who are recommending a buy. One has a hold, and only 3 brokerages have a sell recommendation on KPIT Technologies. And I just said, KPIT with JP Morgan's note today of 520 target price, that's the lowest in the street as far as KPIT is concerned. The buy recommendations have an average target price between 750 to 1050, so that's a wide range. But the stock is reacting today largely on the back of an anti-consensus note from JPM, where they believe there are challenges for KPIT, and hence an underweight rating and a target price of 520. A potential 40% downside from current levels.
All right. The other stock in focus was GMR Infra. It gained 7% today after analysts turned positive on the stock following news flow that came through. In case you're wondering what it was, Vivek is here with more details. Vivek.
Well, that's right. So GMR Infra is the stock, it's been buzzing of late. Stock's been doing quite well. So quite a bit of news flow, especially towards the end of FY23 as far as the company is concerned. Significant fundraising as well as group simplification is something that is aiding or unlocking value as per what, Kotak Institutional Equities is saying. Now, first, having a look at the news flow itself, the company recently raised close to 2,900 crore via the FCCB route, and the conversion price for this particular, fundraise was at 43.67 rupees a share. Along with that, the company also said that it is looking to merge its subsidiary GMR Airports Limited with itself, which is the airport platform unlisted entity. So now GMR Airports Infra becomes the airports listed entity, and the group simplification works in a manner in which the shareholding comes to the GMR group at 33.7%. The group ADP from France holds around 32.3%, and the public shareholding, the remainder, is around 34%. Now, what is Kotak Institutional Equity saying? They're saying that number one, they have a buy rating on the stock with a target of close to 45 rupees. They're saying that GMR has now delivered on its promise of simplifying the group structure, and Group ADP will be bringing in close to 3,400 crore of investment into the consortium. So this particular simplification leads to access to lower cost capital, which they believe will lead to significant savings and also improved upstreaming of cash flows. So what they've done is they've retained the value of the existing airports and increased the fair value of the stock on higher value of the new airport wins that GMR is expected to get.
What about RVNL, Vivek? That stock surged in trade as well. The company has won multiple orders from Vande Bharat train set manufacturing and maintenance to an LOA for a highway project in Jharkhand as well. Tell us a little more about that.
Well, that's right. So RVNL actually is the stock in focus. What's actually happened over here is that the company has managed to bag and get onto its multiple orders in FY23. So if you take it, from March 30th onwards, the company has uploaded multiple notifications to the exchanges. On March 30th, remember the company which was earlier declared as the lowest bidder along with the Russian JV partner for the Vande Bharat trains, they've gone ahead and put that onto their book. So it's now part of the order book. This is for the Vande Bharat train set manufacturing, come the maintenance order. March 31st, the company along with its consortium partner got the letter of award for a highway project in Jharkhand, project cost of close to 1,272 crore. March 31st, another order win, emerged as the lowest bidder for an expressway contract in West Bengal. Cost of the project is close to 721 crore. Remember, RVNL has consistently maintained that they expect to maintain their order book above the 1 lakh crore mark, and this is something that is playing out especially in the last week of FY23, where a lot of the order wins for a lot of the infrastructure players are getting booked.
Okay, sticking with brokerage commentary, PB Fintech lost 3% after CLSA downgraded the stock. Yash Jain is here with the details. Yash, over to you.
Well, it's a very interesting note which CLSA has written on PB Fintech. What they've done is they've downgraded the stock to outperform from buy earlier, but the target price has been raised higher to 710 rupees from 660 rupees earlier. The new target price gives you an upside potential of about 36%. What CLSA says is that the stock has rallied 60% in the last 5 months. That has been a result of two things. Company demonstrated a path to profitability, and the second one, pressure from selling shareholders has eased. Now, they also say on the qualitative side that lower burn rate in the new initiatives will aid faster break-even. Also, key value driver will be growth in the platform business. On the valuation side, they say that the framework factors in share of premium to increase to 4.6% and 8.4% by FY26 and FY40 from 2.1% currently, and they expect a 33% CAGR for insurance premium between FY23 to FY26. Importantly, CLSA observes that new initiatives for the company at this point of time is not a game changer. But one thing that they say should be tracked going forward should be the regulatory changes and the disruption which they get on the competitive front, especially on the side of Bima Sugam.
Okay, thanks a lot, Yash, for that. With that, it's a wrap on this edition of Markets Today. Have a great day. Thanks a lot for watching and good evening.
Powered by